International banking and finance. This is the topic for today's video. What we are going to cover to understand the importance of large multinational banks in both domestic market and overseas market per se. To explore multinational banks operate around the globe and to identify the financial services that they offer, to see how and why international banking is closely regulated in many areas of the world as of today. The scope of international banking activities, if may be stated that the facilities that the banking corporations extends are international department in their home offices, full service branch offices in overseas market, foreign market, shell branches on offshore islands, representative offices, Edge Act and Agreement Corporation, and definitely IBFs as in international banking facilities. Also about the agencies of office that's been established. Now, this is the whole gamut of international banking activities, having international branches at home offices, having international department operations at home controlled offices, having full service branches overseas in foreign branches, shell branches in offshore island, representative offices, agency offices, international banking facility, Edge Acts and Agreement Corporation. So the kind of facilities adopted by a multinational bank depends on the government regulation as well as the bank's ambition as far as size, goals and locations are concerned. So yes, what are the services that needs to be offered by an international bank? Multinational banks offers a wide variety of international financial services to customers, issuing letter of credit for importers buying and selling of foreign currencies, accepting European currency as European currency deposit and making euro currency loans thereby. So you are taking currencies at international level, probably even dollars. If you accept them and probably issue dollar loans or euro currency loans, marketing and underwriting domestic and euro currency bonds, notes, and equity shares, securitizing the loans, advising and assisting the foreign investment as it has been offered, as is required, as is mandated within the framework of the federal government regulations. So yes, some of the world's largest banking firms attempts to offer customer one-stop shopping and becomes a universal bank for all their requirements. Universal banking combines traditional banking, insurances, securities trading, and even real estate broking under one corporate umbrella. Look what the full gamut of financial services is being provided by International Bank in terms of not only banking, insurance, securities trading, real estate brokering also. So, Tom, let me give you about synoptic views of what the foreign banks in US is doing around here. Look what they have been doing. If you look at the total number of assets, it has changed from $1,000 billion to approximately $7,000 billion and counting. And this was way back 23 years back data that I'm trying to tell it to you. Assets held by domestic owned bank is somewhere down the corner, down the corners have been doing from $1,000 to approximately $5,000 or $4,500 if I may say so. Whereas assets held by US banks, US offices by foreign banks, it was zero, negligible, absolutely not represented in 1975. That's approximately 25 years of growth, and you look what has happened. It has garnered from approximately above $1,000 billion of businesses that they are doing about it. Now you look from scratch, from in just in 25 years, what magnum of growth it has already encompassed. So we are talking that there was a pressure on Congress for more extensive regulation of foreign bank, so as to be fair to the domestic bank and to ensure the effectiveness of the domestic monetary policy thereby. Oh, what are the acts that have been incorporated in US? And believe me or not, similar acts must have been enacted within your domains, within your country boundaries. So I'm just giving you just as a hint of understanding what has happened, and probably you can draw some parallels for your countries. As in Banking Holding Company Act Amendment 1970, International Banking Act, which was brought in 1978. Another 2 years later, Depository Institution Deregulation and Monetary Control Act 1980. And 11 years later was Foreign Bank Supervision's Enhancement Act that was enacted. So, regulation of international banking activities of US Bank. The Federal Reserve Board is the chief regulatory agency for US international banking activities, especially where Fed bank members are involved. Since it is difficult to separate foreign bank operations from its domestic activity, the protection of the domestic deposits and the stability of the domestic banking system is of prime concern to the Fed, as the case might be. The future of international banking. The future of international banking is clouded at this time due to the many cross current of economics and politics that pervade our world. Considering political and currency risk, lending funds in the international arena is getting riskier with every passing of the day, on average, than that of domestic lending. Not surprisingly, the surveys in US banks shows that the loans to the distant nations are mainly short time, and many are made up of bank themselves, thereby nothing beyond it. The future. Allow me to talk about the future of international banking. A persistent problem in international banking is the preservation of public confidence. Is the preservation of public confidence in the banking system. Essentially, this means protecting the major multinational against failure. International Lending and Supervisions Acts 1983, Basel Agreement 1988, approximately then signed by 11 countries, now probably more than 40 countries are signatory. The future of international banking is deregulation. There is a growing trend. Remember, there's a growing trend towards relying more on a private marketplace and less on the government rule making in order to regulate global banking. At the same time, regulatory cooperation and harmonization of banking regulation across nation is necessary to ensure that the minimum level of public scrutiny is there. Transparency has to be brought in. If nobody is giving it, it should be hammered down altogether. Prospects and issues for the 21st century, limited by capital and the availability of experienced management. The future growth of international banking should be more gradual and loan quality more of a factor. The actions of regulatory authorities and competition from non-bank firms can also affect the future development of international banking per se. These are things that needs to be noted around. So yes, by capital, if it is limiting the availability of experienced management, the future growth of international banking should be done on a much more gradual basis, and loan quality should be monitored stringently. The action of the regulatory authorities and the competition from non-banking firms, as in non-banking financial institutions, NBFC, also affect the future development of international banking. With this, I come to an end of this video. Thank you for watching it.